Welcome to Rogue Trader. Please read the disclaimer and remember that prices can go down as well as up. Hello, and today I'm taking a look at Avon Protection. Avon Protection are classified as a defence industry stock, and their main areas of business are in masks and rubber suits and in making army helmets. Now, Avon Protection recently changed their name from Avon Rubber, and I did a couple of videos on Avon Rubber last year to a lot of detail, particularly in the first video, including some of the military specs and stuff. But this is going to be mainly just an update video where I concentrate on more of the financial stuff. Avon Protection, who used to be called Avon Rubber, were originally a protection part, which was CBRN, or chemical, biological, radiological and nuclear defence. So that was really rubber suits, gas masks for air crew and for fire, also for firemen and stuff like that. And they had a business called Milkrite, which was to do with the rubber teats for the dairy industry. And you can see that they were actually doing quite nicely. They had some good organic growth in the CBRN division, and the Milkrite was a fairly solid business, bringing in steady revenues. However, from 2018, the management began to embark upon some boardroom gymnastics where they converted the company into solely a defence industry stock. They sold the Milkrite milk business and bought a helmets and armour business off 3M, plus more of a retail business called Team Wendy. Team Wendy is something between a Walmart and an Amazon for selling helmets for military and also other purposes. Unfortunately, because of some problems with the product, they've had to exit out of the armour part of the helmets and armour. And we can see down here that from 2018, 2/3 of their business was the protection business, which is essentially the rubber masks, with Milkrite a third, and following this game of musical chairs of buying and selling companies, they're still 2/3 Avon Protection, which is the rubber business, but you can see they've now exchanged the milking stuff with helmets and armour and the Team Wendy's. So looking at the stock price history, in 2018 they disposed of their hovercraft skirt business, and I think this was paving the way for all the buying and selling that was going to ensue. They got a couple of big contract wins in their rubber mask business, and we can see good organic growth in their CBRN business, which that was all part of. Then in 2019 they acquired 3M's ballistic protection business for 91 million. And I'll go into a lot more detail in my earlier videos, but this, summarising it all, they traded about 100 million in debt plus 10 million on new annual expenses in exchange to what at the time was expected to be about 690 million in new order wins. Plus they got this Ceradyne body armour and helmet IP. So at the time I called it deal of the century. It looked like they were getting a lot for their money. And then in early 2020 they got this infamous 0.6 billion worth of body armour contracts based on that 3M deal. So there were two deals. Here was one for about 0.3 billion. And then here was a second also for 0.3 billion. And this was providing the US Army with actual proper carapace body armour. It looked like it had a lot of potential, but they had to go through this initial testing phase first, and this was in competition with other people as well. So they sold their dairy business for 180 million midway through 2020, and then acquired Team Wendy for 130 million. So this was when I did my first video, and if you have particular interest in this company, I really do advise that video where I go into a lot of detail. But in summary, I decided to stay away from them because although we could see the share price had gone up a lot in accordance with these in accordance with the 3M takeover and these body armor contracts, when I actually looked at their numbers, it wasn't clear to me that the sum of the constituent parts was greater than the whole. When you look at the combination of all these different businesses compared with what they had before. So I decided just to keep them on my watch list. And then when the full year results came out, the share price plummeted. And then even worse, they had this trading update regarding these massive 0.6 billion body armor contracts. Here's their trading update. And essentially they said that their body armor contract was delayed because it had failed first article testing. And at the time, I assumed that maybe it would, maybe they could get around that and it would then pass subsequent testing. But still, that delay, of course, really didn't help the share price, as well as the results confirming what I'd suspected, that actually the new company they created wouldn't actually be performing much better than what they had initially with Milkrite and just the rubber mask business. Stayed away in my second video for those reasons, and since then the share price has just continued to decline. There was again another trading update midway through 2021, and in this trading update they said that there was modest revenue downgrades, but this was due to COVID-19 related supply chain issues. And if you can remember about this time last year, that was all the talk about how there was all these supply chain disruptions. And so that was in many ways a bit of a forgivable trading update. And then there was some positive news flow in that they achieved a total of 0.3 billion worth of new contracts. So that is actually fairly positive news. But then when we look at the share price, it's right back down to where it started. And a lot of this is down to the loss of this 0.6 billion body armor contract. And then they finally updated, it was in their full year, I believe, here, that they decided on a strategic review of their body armor, and they basically decided to completely scrap the armor part of their helmets and armor business they'd bought off 3M. Now their full year results weren't really very good. In actual numbers, an operating loss of nearly 30 million and a 8 million net income loss and an 8 million net loss. They went to great efforts to also produce adjusted numbers where you take out exceptional items and things. But even these adjusted numbers, they're doing only just as good as before all of the boardroom gymnastics. So this explains why, after all this excitement, they ended up right back where they started, but perhaps performing slightly worse. And then in their half-year results, which have just come out, and they've only just come out with their half-year results. And in their half-year results, they announced that their CEO is leaving the company. Also, looking at the numbers in their interim report, and in green, this is the actual real numbers, and then in yellow, this is their adjusted numbers. And they have a breakdown of how they create these adjusted numbers, but it's mainly actually just impairments for the body armor as contract fails, and there's 14 million amortization, and there's 14 million amortization of acquired intangibles from Team Wendy as well. So there is an explanation of how they create these adjusted numbers. But if you look at the adjusted numbers, the revenue is the same from 2021 to 2022, but the admin costs have increased. So the operating loss, so they've gone from an operating profit of 12.5 million in 6 months 21 to a operating loss of 1.2 million in the first half of 2022. And again, for the adjusted numbers, they've gone from a profit of 8.7 million to a loss of 2.2 million. If you look at the raw numbers, they've gone from a 3 million operating profit to a 11 million operating loss, and their net loss has increased from 1 million to 12 million. So these numbers really are atrocious in their first half, even if you look at just the adjusted numbers. So we can see how in the first half the numbers they produced are getting even worse than with the full year for 21. And that seems to then coincide, and that coincides quite nicely with the CEO getting a job somewhere else. So a lot of their problems seem to be around this takeover of the 3M ballistics protection business. And whereas they were supposed to have 0.7 billion of gains, they've now only got 0.3 billion of new contract orders. And that's actually thanks to these new contract wins. So here I've put together all of their sales pipeline the best I could, although there's a good 30-40% of stuff that I couldn't actually put in a particular bucket. But we do see that the masks business, which is what they started with originally, does seem to have good long-term sales coming in. And their big problem was they lost out here with the armor part of the 3M business. However, this new contract win for 0.2 billion is actually quite encouraging, and that's only just come out. This is where I totted up their future pipeline revenues the best I could. And we really see here the difference that the body armor contracts made. This dotted line here is their total revenues with the body armor, and this is their new revenues once you take away those body armor contracts. However, I have to say there is some potential in the future for some pretty sizable new orders coming in the helmet sector. So that is some speculative upside, I think, for Avon. So looking at their profit and loss, and first thing to mention is generally, often when I look at companies and there's a similar signature going through every year, that's generally a good sign. And when you see all these little anomalies all over the place that then invite me to go and read in to understand what's different, that's generally a red flag, I find. So their revenues have increased. As we see here, their total revenues have gone up. But the problem is that their expenditure's gone up as well. And this produces this net income history that looks rather nasty. They had nice organic growth initially with a beautiful widening, with a great widening between the income and expense. And then all of these boardroom gymnastics have led to their income and expenditure going all over the place. Obviously, this big increase in 2020 was because they got money from selling the Milkrite business, but now they're actually in a net loss, and this profile really doesn't look very attractive. We can see here their gain of 161 million from the dairy sale, and some extra big general and admin expenses in 2019 and 2021. And these are related to the disposals and takeovers. And in 2021, there was 47 million of that was related to the impairments for the body armor business. So the numbers for 2021 look really bad compared with 2018, which was before all of the shuffling around the companies. But even if you go by their adjusted numbers, you know, all of that, it was kind of, they're no better off than they were in 2018. Another noticeable thing is these pension actuarial gains and losses, which happen. They've got these overhanging pension liabilities, and then according to how their pension funds do one year or the other, they get these massive, they get these fairly large 14 million and then actually 30 million in 2020 losses or gains. So that then means that their actual overall performance and their net income can be quite largely affected by just these pension fund problems. So that's kind of makes them quite a choppy sea to be investing in. Just that, it's bad that something as unrelated to the main business as their pension liabilities can then have a big effect on their overall net income. So here's their assets and debt, and they have doubled their assets from all of these takeovers. I noticed that actually a big increase in intangibles, which I guess is related to their Armour IP and then perhaps their Team Wendy future sales. And we see a lot more inventories here, which I think are attributable to the Team Wendy business. The Team Wendy business has got like a retail aspect to it, so you can see how overall the structure of their assets and debts shifts slightly towards what you'd see in a retail business. You can see how they were building up. You can see how they were building up cash quite nicely up to 2018, and then they've got this large amount of 187 million in 2020, which is now down to just 14 million. And we can see, however, the debt shot up to 66 million. And actually, in their half year, I saw that that's now up to 91 million in debt. So this actually is quite a red flag, I think, this debt. And you wonder, whereas before they had no debt when they were piling up cash, was it really worth this game of musical chairs to create a business now which is 91 million in debt and loss making? When I looked at my valuation profile for Avon Protection, see here how the stock price was in a bit of a bubble, with everyone expecting massive revenues. When the numbers came out in their full year results and reality set in, it sent the share price right back down to ground. And now the share price and the market cap is actually similar to what it was before all the merry-go-round. Actually, in light of this and looking at this profile, the share price doesn't actually look, the share price does not look overpriced now compared with before all of that action. In fact, the net assets are higher than they were back then. So actually, the share, at least based from this visualization on its own merit, the share price doesn't, the share price doesn't look that bad at the moment. And I've got my plot here of price to book versus price to equity. And in black here are the defense stocks, and Avon Protection are actually the best valued of those. However, I'd say you've got a lot more confidence in BAE Systems' future revenues than you do in Avon Protection. So here's the statement of cash flows, and they generated 24 million from normal activities, 3 million from disposals, and they borrowed 1 million, and they had to pay out 3 million in pensions liabilities, 13 million in tax, and 32 million they had to spend on capex and new R&D development. They had to pay 6 million interest on debt plus their lease responsibilities, and they paid out 131 million in 2021 to buy Team Wendy's. Plus they paid 12 million in dividends and 4 million in share buybacks. So this was obviously a different year. This was obviously a difficult year to judge them by because of this Team Wendy's takeover. But when I take away the things that they don't have to do, then they only made 24 million from normal activities, when they lost 54 million from these things that are actually important things for them to do each year. So that means that their statement of cash flows for me is a 30 million cash loss in consideration of that. So they don't look very healthy from their statement of cash flows. So in summary, over the last 3 years, the leadership of this company have played a game of musical chairs, buying and selling companies, because they wanted to achieve this vision of being a defense stock. But unfortunately, they've transformed a company that was growing quite nicely organically, bringing in more cash every year, and had zero debt. And they've transformed that into a company which has 91 million of debt and is losing money. And according to their half year, is actually starting to lose money quite badly. The 3M takeover looks like a bad boardroom deal. However, having said that, there is scope in the future for some more big ticket contracts in their helmets business that they got from 3M. But overall, they're clearly a bit of a mess at the moment, so I'm going to drop them from my watch list. However, having said that, the current valuation seems quite reasonable. So, if I held some of these, I wouldn't be panicking to sell at the moment. And there is this speculation that a few big ticket contracts could swing the company back into positive net earnings. However, to me, that's a big unknown. So although the share price has reverted back to what seems like fair value, I'm staying well away due to a multitude of red flags. They're now losing money. Their statement of cash flows look bad, and the CEO just left right on the dot of the half-year results, which were clearly going in the wrong direction from the previous full-year results. So I'm dropping them from my watch list. If I did hold them, I'd be looking out for them to win some more big ticket orders, because that's very important to the future of this company. So I hope you've enjoyed this Avon Protection roller coaster ride, and good luck with your own investments. If you enjoyed this video and would like to support me, I'm on Patreon. There's a link to my Patreon page in the video description below.